Guys, there you go, guys. It is 5 o'clock. It is after hours. I am Chris Peshek, broker associate at Peshek Properties and the Dripping Springs Home Team. This is my buddy, Stephen Babcock,
How's it going?
residential mortgage loan originator. Which I got it right with CMG.
Got it right. Very impressed.
CMG Financial right here in Central Texas. And guys, what we do on this show, and today's going to be a fun day, is we have a little adult beverage and we talk about all things real estate, mortgage, macroeconomics, banking, disasters, stuff. And that's what we're going to do today. Is that what we're going to do today?
Brother, it's such a big day. For the first time in our 2-3 year show history, I have made a PowerPoint slide.
Yeah.
I've also updated since sending to you.
Oh, nice.
But I mean, today was a day.
All right. Well, let's start off with what are you drinking, my friend? Every banker that I've talked to today is like, today's going to be a good day for beer and whiskey. Oh, my man's drinking wine. My man's drinking wine.
I got some red wine. I haven't touched it yet. This is from like 4 days ago, but I used one of those vacuum seal things, so we'll see.
How it's heart healthy. Look, red wine is heart healthy. Man, I'm outside of my wheelhouse. Okay. It's still Central Texas. Okay. It is St. Elmo Brewing Company. I'm drinking a Carl. This is actually a really popular Kolsch, and we ended up with someone when we were barbecuing one time, and you know what? It's not bad.
I don't know if this is terrible to say. I've never actually heard of that
before. St. Elmo is down in South Austin, just south of 71. I'll say this about St. Elmo. They've got some of my favorite IPAs in all of ever. They've got great IPAs. This is a really good Kolsch. It's clean. It's exactly what a Kolsch should be. Daylight today. It's good stuff.
Excellent.
And plus,
I'm laughing because I just got a text message from a solicitor telling me that they can get me more leads. No idea how many of those people there are reaching out to me right now.
Oh, I figure. And the best thing about this is if you have ever watched The Walking Dead, I love saying the name because I go, Carl!
That's awesome.
So there you go. Guys, I'm going to remind y'all, hopefully you have a beer unless you're driving. In that case, I hope it's whiskey in a flask so the cop doesn't see it. That's a joke. It is a joke.
However, smart advice in that situation.
It is 100%. But this is an interactive show. So please ask questions, joke, give us crap, tell us we're wrong, tell us we're right. Doesn't matter. Even if you're watching it after the fact, because we're streaming this to YouTube and Facebook. And actually 2 places on Facebook. Talk to us. Let's go. Talk to me, Goose.
Man, I woke up this morning and I got a text message from my basically the software that tells me what's going on with rates. Mm-hmm. And they're like, big movement today. Okay, fine. There's been big movement. How many times in the last few years, you know what I mean? It's and especially just recently, and it's like, well, I'll get to it when I get to it, right? It's just big movement all the time now.
And then you had a call from some random realtor.
Yeah, named Chris. Yeah. He's like, bro, what's going on today? I'm like, what are you talking about, Chris? And tell him what you told me.
I don't, you know what? I don't even remember, but I just
told me that you were talking to a banker friend of yours.
Oh, that's what it was. Yeah. So it actually goes beyond that. But anyway, yeah, I was talking to a banker that I know. And when he got into the office this morning, he had 6 voicemails from his clients wanting to pull their money out of the bank because they were concerned about whether or not it was insurable, FDIC insured. And one of these people was to the tune of about $2.5 million, wanted to pull it out of a community bank. And he was like, what the hell? And so evidently the run on SVB and what was the other one last week? I know you're going to talk about it. Silvergate, thank you. The run on those that actually shut those down has triggered a little bit of a panic. I think it was mitigated for the most part by the Fed or by the government yesterday and today. And he said only one of his clients ended up pulling their money. The other one, they were able to kind of position in some things that were insured. But anyway, when you're a banker and you get to the bank in the morning, and you've got people wanting to pull out millions of dollars out of a bank that does not have cash on hand, because no banks have cash on hand. Everybody's seen It's a Wonderful Life, right? They don't have cash on hand. It's in your house.
I gotta tell you, let's just start. Let me just start. How do I make this thing full screen? Let's see.
I think I can do this. Add to stream. Is that full screen enough? Or do you want
controls
that?
hidden? Press escape to show controls. I guess I'm sharing. Do you see my screen?
I see your screen. Yeah.
You see the left bar over here? I just went to full screen. It's not working. I got to be in like presentation mode. It's been college since I've used this thing. Well,
yeah,
now
Kurt,
okay. You know what? Sorry to everybody else. Here we go. So last week Friday.
Well, and Kurt's chiming in. Or yeah, Kurt. That's what a lot of people have done. That and there's some options that were made available. Yeah. So
we're definitely going to get to that, which is great advice. Okay, here we go. So.
Fact, wait, time out. Before you start, you said it's great advice. I know, Kurt knows. Why is it great advice to set up multiple accounts with less than 250
We're going to get to that in just a second.
Okay,
this is part of my slide here. So,
cool.
Man, Kurt, you know how I can get the full screen on this? Is it like F5? What do I press?
Dude, there should be a thing in the bottom right-hand corner.
Explore. You know what? I'm not going to screw this up.
Just go.
Time on this today. So last week, Friday, we had Silicon Valley Bank go up. Basically say we can't meet deposit, we can't meet people's withdrawals. Remember, Silvergate was Wednesday, okay? So second biggest bank collapse in U.S. history. All right, when was the last one? That was 2008. You may remember that. Okay, so over the weekend then, that was Friday. That was just Friday. Over the weekend, Signature Bank failed.
Oh, I didn't hear about that.
That happened Sunday. So Signature Bank has, and I wrote this down too. Signature Bank has about 1,800 employees, 1,854.
That's what I asked.
Well, Silicon Valley Bank has 6,567 employees. To put that into perspective, though, something like Chase Bank, which is the biggest, they have 240,000 employees. So to say we're going to lose 6,567 employees sucks, but it's not the same as saying you're going to lose a Chase Bank.
$250,000.
Drop in the bucket for them, right? Okay, well, moving on. At this point, though, this is the second biggest collapse, which is not a small thing. 44%, it's estimated, of Silicon Valley money was tied up with this bank.
That's a lot of money.
Okay, so moving on. This equaled government panic, right? So you've got just a couple headlines. The Silicon Valley Bank contagion is just beginning. U.S. stocks, Wall Street falls as SVB collapse, fuel bank contagion fears.
These are weekend headlines.
Yeah, I mean, no, these were this morning. I got all this. Well, I mean, I guess it was 5 hours ago, so 2 hours ago. No, this was this morning. Some of this one was yesterday, right? Okay, we're gonna keep going. So what happened? Government got involved. The FDIC got involved on Sunday. Brother, they met on a Sunday. When does that happen, right?
That's pretty massive.
They created bridge banks, which is standard, okay? The FDIC, by the way, are the people who shut down the banks in the first place. So they show up and shut down the bank and then create new banks that are just there to make sure that people get their money back. But what does that mean, getting your money back? That means you can get up to $250,000 back. That's what the FDIC ensures. Okay, moving on. The other thing that happened was the Federal Reserve. Now, this was a big deal. Created something brand. If I were going to get my my mortgage license next year and I had to take the test, I guarantee you this would be on the test. Maybe in 2 years. But it's called Bank Term Funding Program. Okay, promulgated over the weekend. Okay, it gives. I mean, this could not have happened in 2007. You had to get through the legislation to get through 2008 to allow this to happen. The Congress didn't vote on this, man. And so what's happening here is that this program will exchange assets, treasuries, and bonds, right, at their face value. Okay, sorry. So why does that matter? So here's what happened to Silicon Valley Bank. They had a couple bad headline news reports, right? Coupled with the stock price that was kind of falling, and then they had some people try and take some money out. Okay. When you take money out of a bank, the bank doesn't have your money. In fact, they're not supposed to have your money. They're supposed to take your cash that you deposit and then they owe you money. That's a liability. So they actually have to take this money and buy an asset with it, which is usually some kind of treasury, which is a really fancy way of saying something the government sells. Okay. Like bonds. Okay. And what's happened now is with all these rate hikes, these banks have all this money in bonds. Well, the bond money is now not worth as much as it was, right? So they have to sell this bond. Let's say the bond is worth, I know that at the end of 2 years, I'm going to get $200 for the bond. Well, today I need the money right now because I have to pay off this guy who's trying to take his money out of the bank, right? Okay, well, today it's worth $90, not 200. So I'll buy it at 90. Great, fine. Well, F my life. I guess that's what I have to do.
Yeah.
So you're gonna panic sell everything. And what happened is they sold off so much, they finally said, we don't have any left. We can't, we have to close our doors, right? And here's the scary part. You looked at their books, they were very conservatively invested. There are reports saying they weren't, but if you actually look at their numbers, right, that's just bad journalism. If you look at their numbers, they had really safe investments. They were not a wildly out of control bank. Yes, they had some crazy loans for Silicon Valley kind of stuff, tech startups, but a lot of banks did. And these guys had to take that money and then invest it in something, and their investments were solid. So the scary part is that if their investments were solid at the beginning of the year, right? And then I've done this slide saying this is a relatively small deal because this is what the Fed does or the FDIC does, right? But this is a really big deal because what's going to happen now is if this program had existed on Friday, right? Then Silicon Valley Bank would be able to take advantage of this program and sell all their bonds for the fair value, not the $90 when they're really worth 200, right? Okay, well then who's going to hold on to all that debt? Well, the government says it's not going to be a tax because it's just a temporary okay, fine. Well, then temporarily you have to come up with all this new money, which means inflation, right? Which means we're going to pay for it no matter what. And then what happens if they don't pay it back, right? So I have all these other stats on here for this next slide. Let's see, it's not 2008, but this is a flat out bank run. This is what's happened is you've seen a bank run, right? It's not, olden times, right? It kind of is with all the lines you've been seeing today, which, man, we're going to see what happens this week. But this is like a new age bank run, right? Let's see here.
Oh, here's the other thing, Steve, as you're going through that. Do you have a link to this? Can you put a link in the comments?
Oh, to this?
Yeah, to your presentation. Yeah.
Do I? Can I? I don't know.
I think so. I'll go. Yeah, I was about to say, I'll go see if I can find it.
I don't care. You can share it with anybody. That's fine. So I could read all this stuff, but that's boring, right? The big conclusion here is that the Fed can't keep raising rates if banks are failing, right? The banks can't sell their assets to pay back depositors fast enough. So therefore, we have to stop raising rates, right? Okay. So what happens when we stop raising rates? Right? Why were we raising rates in the first place?
To slow down inflation.
Right. And so what you're going to do by saving this bank is increase inflation by funding their short-term investments for things that aren't worth what they say they're worth, right? It's not by today's standard.
Yep.
And we're going to stop or slow down the rate hikes, which we were doing to fight inflation. So the solution is to make inflation worse. And look at this. Look at these lesser seen headlines. First Republic Bank halted for volatility, down 65%. This is stock market stuff. Pac West, look at this one. Regions. I looked it up. This is our Regions Bank here.
Yeah, it's the one here in Texas. Yep.
Dude, I mean, what? Western Alliance, 76, record 76%. All of these halted for volatility.
And the federal government is the one halting trading on these and halting withdrawals.
Yeah.
Like,
so here's the
they're
kicker.
just
Depositors, you in the U.S., you're protected by the FDIC, and they insure you up to $250,000 per account, right? So if you have $1 million in 4 different accounts spread equally, you're going to be fine. Okay. And I mean 4 different banks, by the way. Yep. The Dodd-Frank Act, this is one that most people don't understand, also created a bail-in. Under this scenario, financial institutions would use the amount depositors of deposits that are in excess of that $250,000 balance, and they take it.
And that's what you told me this morning, and I like, what the heck?
Yeah. So what
Like,
people
they
are
can
really
literally take
afraid
the
of.
government can literally take your money.
Yeah, I should probably spend a little more time on this, right? Um, so the scary part is this last sentence here of this paragraph. The retirees who receive a pension are also subject to this confiscation of funds as well. Okay. In other words, if we can't pay for this, you get to pay for this pretty much any way possible. Okay, here's the really scary part, and it's the last two here. At the end of 2022, well, that was 3 months ago, folks. Okay, maybe a little more, 3.5. The FDIC had a total reserve. That means how much money they had around in case of emergencies of $128 billion. That's to pay out these $250,000. Why can't I type?
Insurance notes, yeah.
Correct. Okay. Well, look at that next line.
They didn't even have
Silicon
enough
Valley
number
Bank had
to cover a
$179 billion in deposits.
didn't have enough money to cover a
Well,
mid-sized
they
bank.
had plenty actually, because a lot of those deposits were well over the 250. But the point is that if this bank, which is the 16th largest bank in the United States, is by no means in the top 10, it's not even in the top 15, almost. If they're gonna hit that limit, imagine. By the way, they're the third bank, and they're not even the most recent bank.
Yeah.
Right. So, all right, now I get to stop. I get to unshare my screen here.
I got you.
Stop screen. There we go. Boom. It's been a long time on that graph today.
No, you did, and it's good. And so I'm gonna, yeah. Kurt was mentioning here they're expecting the Fed to raise rates so fast to tame inflation. Now they can't raise rates. So that's the thing. What I mean, the Fed's backed into a corner. That
Kurt,
was your mechanism. That was your mechanism to deal with inflation, and you just lost it. Because look, they care more about the banks than they do about inflation and you and me. That's just a fact of the matter.
yeah, well, and they should. And I hate to
Well,
say
yeah,
that.
absolutely. Yeah.
I hate to say that, but let me just give you an example. Over the weekend, I was reading this article about South by Southwest goers, right? Mostly tech people, right?
Mhm.
And there were CEOs there. Most of the tech CEOs had money in this bank that announced going down on Friday, right? So during the week,
Yep.
like dude, on Thursday there was this big steak dinner that SVC Bank held for everybody, and everyone there knew there were problems, and nothing was said about it. They didn't mention it one
God.
time.
Yeah.
And at the end of that night, a lot of people started saying, "That's it, we're getting out." If they're having all these problems, we're getting out of this bank.
Yeah.
Thing is, all banks are having issues right now because all banks have to operate by the same principles. They all must not keep all that cash on their balance sheet, right? They have to spend it. It
They
is a
have to lend it out.
liability. If they're holding on to cash, it's a liability. They have to spend it. It's called fractional banking. Look it up. And Chase Bank,
And when
everybody.
they spend it, they get the ability to lend more out, which makes more money, which they then have to spend. Like that's the
Right.
whole game. Yeah.
Here's the worst part, though, is that the powers that be have seen this coming for a long time. You and I have been discussing gold specifically about how the big banks used to find it as a fringe thing. At most you'd say, look, you keep 10% of what you have in gold just in case, there's some freak meteor or something, right?
Yeah.
And today the banks are saying you should have 30% of your holdings in gold, right? And banks are buying gold at record paces, and they have been for the last year or two or so, right? So
Yeah.
it's like they know something's going on. I don't know, it's pretty scary, but what's not scary is what's happened already. What's really scary is what's going to be coming, right? So one of these companies was talking about how they got $5 million in venture capital, 4.5 million, something like that, and
Oh.
they announced it last week, and then this week they're like, we don't know how to. On Friday they're like, well, all of our funds are frozen and we don't know how to pay our employees. Okay, well, how many companies pay their employees through a bank? All of them. Right.
All of them do.
So that's why you go to the bank first, because you're actually taking care of the people that way.
Yeah.
Believe it or not. Right. And what you're going to see is a ton of blame. Right. Each
Already
side's going to have who
started.
they blame. Yeah. Yeah. However, I need y'all to understand the financials for this company were sound. They did not scream any red flags from a what have you been buying kind of perspective. It's the fact of the matter is that these interest rate hikes have done them in, and will do all of them in, theoretically.
Unless
So,
they drop them again, back to Kurt's point.
well, we have this
I mean,
option now, which really isn't an option. You save the dollar, you save the economy. But if you save the economy, the dollar collapses, and if you save the dollar, the economy collapses. So it's not really an option. But at this
yeah,
point, there's a lot of pain ahead. But
yeah.
mortgage rates will get much better.
Well, and and so I've been purposely saving Kurt's last post for that reason.
I didn't
And
see it.
and so here's the funniest part is when my cousin, oh, I shouldn't have said that. When the banker this morning told me that when the banker this morning told me that this guy's got 2.5 million, Kurt asked a while ago, and that was my first question: why in the hell does he have $2.5 million in a bank account?
Oh, because you're a company.
Right. No. This is an individual.
Right. Sure. Touche.
And I was like, so I said the same thing. Why in the hell does he have $2.5 million in a bank account? Send him to me so we can do this right here. Buy land, buy real estate, buy an asset that is, it's something, it's tangible.
You ready for this one? You ready for this one? Roku.
Yeah.
Has admitted that they had $487 million of their total $1.9 billion
In SVB.
About a third in SVB.
Oh my God.
So they're going to get 250,000.
Yeah.
But they're going to miss out on 486-ish.
That's
million.
less than 1%.
They're not the only one. Roblox.
0.5%.
Roblox has $3 billion of cash, at least as of February 28th, and 5% of it was in Silicon Valley Bank. That's about $150 million, I think, something like that, right?
What, I mean, seriously, what, I guess I don't understand. I mean, I understand how it happens, but how does it happen?
Yeah, there's another one, Circle, which is a payments technology company. They had $3.3 billion there out of their total 40, so they're diversifying. And we're all being told that the problems are with the small banks. If you go to read in these articles, they're telling you that problems are with small banks, mom and pop shops, and it is temporarily, but in the long run, they all have the same problem, right? If right now, today, people were told, oh God, I think Chase Bank is having an issue, Chase Bank could have a bank run in the next few days.
That's right. And it would sink them. It would they would get bailed out like they did last time.
The thing is, this new program will bail them out, and they'll exchange the cash for the original value of the assets. So you're not going to lose any money.
That's right.
Hey, but the problem is that they've only put $250 billion into this program. You need a hell of a lot more than $250 billion.
It's trillions.
Dude, you just heard the numbers I was telling you, right?
Yeah.
Like, no way.
That's one bank. That's one mid-sized bank.
Not even close. Yeah. So now think about the companies though that aren't as big as Roku, that had all their money at this bank, that have 100 people on payroll and have $250,000 left over.
Yeah.
And bills do.
Yeah. I didn't think about this, but that's the thing. Yeah, if there's banks where if you have any type of mortgage, investment mortgage, or anything else through them, you are required to have cash on hand at the bank.
Well, sure, but usually about 10% of the overall deposits. Right?
Yeah.
Certain investment vehicles, fine, but when you look at a bank's balance sheet, 90% of what you want is not there.
Yeah.
Right. I mean, again, certainly there's specialty programs. What's he saying now? Laddered short-term treasuries. You're so funny, man, Kurt. You should have hired them as a client, Kurt. Come on, brother. I don't know why you didn't cold call them. All good. But yeah, man, it's a scary time. So the real question is what's going to happen this week.
Yeah.
And on that, I won't bring it up again, but on the graph that I have a few dates, right? I don't know if it's called a graph, presentation, whatever you want to call it. So things that are coming up, right? So tomorrow we get the CPI numbers, inflation numbers. That'll be fun. And then on Wednesday we have
but it's looking in arrears, so it's not going to be that bad. It's always looking back. What just happened last week is not. It's not on there. There's no way it's going to post.
No, I know that, but are you sure it's not going to be that bad?
Well, that's a fair point.
I know nobody knows, right? The PPI numbers, which is the producer price index, we talked about that on the show. That's happening Wednesday, right? And then we get our existing house numbers Wednesday and Thursday. That should be big. And then next week on Wednesday is really a big day. That's when we decide or the Fed decides whether they're going to raise rates. And the overall consensus, at least midday today, was that while we were looking at a hike
A
of
half
either
point.
doing nothing, maybe 25 or 50 basis points, now we're looking at maybe lowering at 25, doing nothing, or raising at most like 25 basis points.
I saw the first Fed president came out and said and recommended 0 rate hike, and then I think I saw another one recommended a decrease of 50.
It will most likely be 0.
Yeah,
They're
they're not going to drop it.
But they don't want to be seen as panicking.
Yeah,
They're famous amongst insiders for chasing the market, but they're also famous for presenting an era of being ahead of the market, which they are absolutely never ahead of.
never ever.
And so it's fun to watch, to be honest, with an outsider, or insider kind of, looking into this stuff.
So let's we're at 25 minutes already, which is awesome because this is a lot of fun. But let me ask you. You said that you got an email this morning that said that there was going to be big movements. So go back to your scenario: great credit score, bad credit score. What's Google saying right now?
Oh, that's a good one. I wonder how up to date they are. This would be a wonderful time to check.
Because last week, if I remember correctly, your poor interest rates were 7.25%, and I think your good were around 6.75%.
So again, we use a 620 credit score. We're using the average mortgage rates from Google.com. You just type in average mortgage rates on a Google search to get this, and you can enter in your information here. I have found this to be the most accurate without the fluff you find from web pages that get paid to put a bank on the page, right? Or how you apply with them and find out that your numbers are vastly different once you've applied with them, or 2 weeks into the process where you've done so much you decide you don't want to change. You can tell I'm a little bitter on that front, right? Okay, so $300,000 loan amount, 620 credit score. I'd really like to look at this tomorrow, but 620 credit score, you're at an 8.32 according to Google, and for the 800 and up, you now are at a 6.9.
8.32. That's 3/4 point higher than last week because you did the same thing last week.
Again, when rates go up, it's not just one bond that's going up. There's multiple bonds that are moving, and from a macroeconomics perspective, there's all these limits to what they hit, the height of the ceiling, and they if they hit this and then they hit it again, they're probably going to come back down. And it's just there's certain things you can kind of almost bank on.
I'm cracking up because I personally know Kurt fairly well, and this comment struck me as funny because I know him.
Oh man. You seen those emails that Fauci wrote to his colleagues, stressing them not to tell people to wear masks because they're great if you have a sickness, but not if you're trying to avoid getting one.
Yeah. Oh, that. And
that'll do it.
This is what we're going to end on right there.
And you keep commenting. We want more.
That's
more
right.
beers, more comments. Right. All right. Man. So how about a prediction then? What do you think is going to happen to the market?
Dude, I have zero freaking idea. I think, the market, I'm talking about mortgage rates.
Sure.
Dude, I think we're going to see mortgage rates take a steep drop because what else are they going to do? Your inflation's going up. You don't have the ability to manage it.
Wait a second. Let me ask you this. I'm going to interrupt you, but I want you to be a bank. The bank of Chris, okay? Yeah. And you're not going to get money from elsewhere. You're going to lend me your money.
Yeah.
Okay. So, are you feeling more confident lending me your money right now or less confident lending me your money right now?
If it's my money, I feel more confident.
You do?
Absolutely.
Why do you feel more confident after today when banks are failing, lending me your money?
Because you've got people pulling out of the banks, causing them to fail, willing to give it to you to invest in an asset that's a hard asset. I feel more confident if it was my money.
Do you think the banks feel the same way?
No, because they're morons. I'll be honest with you. They got bean counters about all this stuff. But do you think I'm incorrect in that reasoning? People are looking for places to put their money so that they can hold on to an asset. They're not looking. They're not buying 5 houses because they're telling you Kurt, you've got all the dude, you've got the money, brother. Let's go shopping. They're
Chris, I
not.
think it's going to be the opposite.
Do you think? Really? Because I look at it from like going back to the thing that you and I know very well because it's in our time frame is you go back to the '07 and '08 and the mortgage bubble burst and all that other stuff. People at that time were buying properties on stated income loans, fog and mirror loans, and we're buying 5 and 6 houses. I mean, it's well told in the cinematic genius of Hollywood. You've got strippers that don't have an income history buying 6 houses in Miami, and I'm sure that's inflated or whatever.
Oh no, I've actually talked to some people that yeah, that's not
so. You look at what that was, okay, and I can understand the apprehension at that time, but that's not what this is. This is people like Kurt, like me, like you, that are going, why the hell do I have $2.5 million in a bank? Let me put this into an asset. I feel comfortable about that personally.
We have that much money in the bank?
You and I do not have $2.5 million in the bank, no.
Yeah, touche. So
but,
you look at
I don't
2008, 2007-ish, right? Where I think we are historically right now. Probably more like 1932. But if you
think?
Yeah,
Man,
really
you
bad.
just went Great Depression on us, dude.
Brother, we just had 3 banks close within a span of a week. It hasn't even been a week yet. We had an emergency Fed meeting this weekend where the government got involved on 2 different levels. They had to have a specialty vote, which included the Treasury Secretary, that had to do something this time that they could never have done in the past. They can only do because of emergency measures. Let's put it this way. Bill Ackman, right, the guy that made a ton of money on pretty much every crash, when he tweets, a lot of people think he's just tweeting so that the Fed reads it, right? And he had one this weekend that said, you've got about 48 hours to fix this. Otherwise, you're in big, substantial trouble, right? It will just last forever. And then another one was if you don't get these things in place, you will have hours remaining until right around 2:30 today when margin calls were due. Now, I texted you about the margin call. I also texted you last week about, what was it, BlackRock missing payment on one of their commercial mortgage-backed securities, which I've been warning about. Man, I warned that one early.
That was been a year, dude. Yeah, you've been on that. You've been on that.
Yeah. So but long story short, man, I read these comments and I forget about everything I've been talking about. Isn't that terrible?
Yeah, no.
I like reading the comments.
Yeah, he was on the board of SVB, and he, according to what I've been reading today, evidently he lobbied to get some of the provisions of Dodd-Frank removed. So anyway, yeah, there you go. Oh, the swamp.
So what's going to happen, I think, is they're going to tighten lending standards. The rates will go down, but not by much. And I think we'll have a decade or so of a lot of pain.
Wow, man, that's doom and gloom, brother.
Yeah, I also think the jobs numbers are fake. So I don't.
You and I've talked about that for freaking 8 months now. Yeah,
right.
Yeah, that goes without saying. But think about this: all of a sudden, okay, and Jesus, and I understand why you're saying this now. You just asked me if I was a bank how I would feel. You didn't ask me what I thought was going to happen to the economy, which are 2 different things.
Well, it kind of is, though. I put that into perspective, right?
Yeah, fair. But I mean, you've got Roku. They lost how many billion of dollars, and
a third of their cash,
a third of their cash. And so, how are they going to keep these people employed?
Well,
so what's going to happen to unemployment?
Let's hope they're not spending that much. The scary part is if this spreads to other banks, which I don't quite know how it couldn't, except that this new policy of exchanging what you bought for what you bought it for, right? So in that case, no, you shouldn't be able to fail, but that check has to come due somewhere. The economics of this,
at some point,
think of it like a scale. You have to balance it out, right? And if no one's going to pay for, if something is worth this, you bought it for this, right? And you're going to get paid this for it. There's still that lack of value out there in the economy that will have to be made up for somewhere. And the real question I have is what happens in a year if things keep getting worse and your asset, your treasury, is worth way less than it was today? Will that just exacerbate the problem? And of course it will. So I'm I think what we've done is we've kicked the can down the road for a year, if we can, because it might signal, again, what's a currency worth? What we think it is, right? And it might signal inflation to a point where it starts that death spiral where we just can't get out of it.
Yeah. Yeah.
I
Well,
think it's already been started, to be honest with you.
yeah, we may not be able to. Yeah. That's what happens. Well, and,
And what-
and that's the thing. So, yeah. And you said a while ago, what do you do? Do you continue to raise rates and kill banks? I mean, to me, that's like that's the way out. Because what happens if you don't? And inflation goes rampant and you're in the spiral. Okay.
There's a few more things going on besides just that, right? Um,
That's a good point there, Kurt.
for instance, you have, like I've been mentioning a lot on the show, you've got the BRICS nations trying to get off the gold standard, right? The petrodollar.
Trying to get to petrodollar. Do you think the U.S. just goes to hell with it? We're going to link it to petro because we've got so freaking much of it. But the other crazy thing, and I think was it you that told me this today? Somebody reminded me today that and I'll be as politically correct as possible. Our current administration just indefinitely restricted all drilling on a huge area of potential oil.
What's funny is that I also read an article today. I read that headline. I also read another headline about how he is pissed off a left-leaning group for opening up drilling in I think it was Alaska, something like that. So I'm over that kind of stuff. I'm sorry, I don't care.
Yeah.
What I do care about is the status of the dollar in the world, right? And
right.
The petrodollar is just another fancy way of saying dollar, right? You want to trade in oil, you trade in dollars. And some of the biggest nations in the world are getting off of the dollar, which means we can't sanction them, which means with 80% of our currency being out of the United States for those kinds of transactions, it would all start coming crashing back in, which would almost overnight, truly within, at least, of course, within a week or so, would crash our dollar.
Yeah.
And then all banks would collapse. It would just be, well, not all, but pretty much, right? I mean, anyways, it's pretty sad. And then what SVC was purchased for $1 or something like that. What did I read today? There was
SVB Europe, or UK.
Euro, right? So it was Euro Bank. Yeah, for €1.
€1.
Yeah. So it balances out, but damn.
But think, I mean, we've been talking about trying to link it back to something. So what if the U.S. links it back to actually linking it back to oil instead of gold? Like there's not a gold standard, there's an oil standard.
We want it linked to oil. We are okay with our dollar being linked to oil. It is right now, and we're happy with it staying that way. It's other countries that are like, U.S., we don't like the power you have.
Okay, I was misunderstanding what the BRICS nations were doing. I thought they were trying to link their dollar to oil.
Everyone is linked to oil throughout the world.
Okay,
and that was the way of the world after World War II. That's when that change happened.
Got you. Okay.
So after the war, British handed over something, tens of thousands of bases throughout the world to us. Remember the sun never set in the British Empire, right? During the war, they thought they might get taken over by Europe, by Hitler, and so they gave all their bases to the United States, and we just never gave them back.
Right.
So after the war, we kept them. Well, we decided to, these are now. Thank you very much. We'll keep them, and so we kept all of them. And we also agreed during the accords after the war that oil would be traded in U.S. dollars. So it's called the petrodollar. It's just U.S. dollars, right? And so only 20% of the dollars printed are here in the United States. 80% of them are out in the world used for oil currency. And when we say, hey, we're going to put sanctions on Russia, that means we're forbidding them from using our dollars to buy oil. And if it's all traded in oil or in dollars, then they can't buy any oil. Right now, Russia makes their own, so it's probably a bad example. But that's how sanctions work. Right. And when you tell me that the rest of the world is no longer trading in dollars, I can't sanction you anymore. And then all my dollars come crashing back in because people are like, I don't want your dollars anymore. I want to trade them for whatever currency is being used to buy oil now. Right.
Yeah.
And I'll exchange those and you can have those back. See you later. Goodbye. And that crashes the currency quickly. Right. And so people try to get out ahead of this stuff. So that they're
that's a way to get past inflation, at least.
Gold is the best way to get past inflation. But yeah,
dude, we've been going for a long freaking time. We got to shut this off. Man, that was a fun one.
Good show, right? It's fun.
Well, not fun, but it was fun. You understand what I'm saying.
Yeah, today is a crazy day. I'm guessing throughout the next year, though, we're gonna have a few more days like this.
Yeah, it'll be.
Kurt, I don't think it exists yet.
Yeah, well, I mean, maybe this is a way for the government to go to their own personal crypto or something.
I think this is honestly, I think that because the World Economic Forum posts their goals publicly, the rest of the countries of the world were like, all right, let's see what they're doing and get around it. And I think they're going to create, if they have not already, with their BRICS nations, I think they're going to either use that or create a new currency and use that and back it by 100 countries plus. right, with currencies. And then if one country goes down, the average holds the rest up. And unless the whole world has an issue, that would replace the dollar, and then no country can take advantage of the other. I think
Yeah.
that's more fair, unfortunately for us. But I do believe that's probably the way it's going to go.
Interesting.
And the Kurt's question was, what other currency is an option?
Yeah. Yep. All right, guys. This is what we do on Mondays. It just so happened that this Monday was an interesting one. And we'll see what the next week holds. See you next week, buddy.
Tomorrow holds, man. Show tomorrow.
Yeah, exactly. We'll see how many puppies and kittens we can fit in our laps. That's exactly right. Guys, we'll see y'all next week, Monday, 5 o'clock.